year, to the point that now you could very easily make the argument that the stock is undervalued. That's what we're looking for. The stock also has to have good technical support. So I want to see at least 2 key bounces off a major level of support. I also want to see great growth from the financials, and I want to see a path to profitability. Those are the things that I am looking for. Now, the first stock on this list is a company called DataDog. They're a software company that has fallen from $199 all the way down to $61. And when we zoom in here, it's very clear that we have a double bottom right around this $61, $62 level, and we have risen back up to 90 and come back down and tested it again. And just recently on Friday, we saw good volume. We crossed above our short-term moving average, and we just broke out of previous resistance that had basically held us back for all of March. So personally, I think we're seeing a double bottom, and this could be the start of a breakout. Now, like I said, I'm only looking for companies that have pulled back, so this one checks that box, but they have to have excellent growth and a path to profitability, and DataDog has that. If you look at their revenue in 2020, they were doing $177 million. Now they're doing $469 million in just under 2 years. They've almost tripled their revenue, which is extremely nice to see. Their cost of revenue is extremely low, maybe like 20% here, and their gross profit is steadily increasing. All of the numbers look really good, and I like this company. Now it's just a matter of when do you start to buy and accumulate the stock or enter the trade. Next one here is CloudFlare. Very, very similar story. Down from $132 down to $37. We tested $37 in June of last year, as well as right at the beginning of this year. We rose back up to $72, and we've come back down to $50. Now we're starting to break out of $50, and I really, really like CloudFlare. I'm about to do a big video on CloudFlare because their business model is super unique, and with artificial intelligence and everything happening, CloudFlare is about to explode in my opinion. The stock is down 75% from the highs, and I think there's some major support around this $37 to $40 level. Now that is a major pullback from the 61 where we're at right now. So I'm not saying to put a stop loss at 37 or 40. I'm saying put a stop loss probably at 50 or 55, and if it goes south, exit the trade right away and buy back in on the bounce off of $37 or $40 if it happens. Now, like I said, CloudFlare, again, increasing revenue very, very dramatically. The revenue has over doubled in the last 2 years. Very impressive. All of the numbers look extremely good, and the revenue growth is what looks to be almost accelerating. So very, very nice to see. I like what CloudFlare is doing, and I think there's a big opportunity ahead. Last one here is UpWork. This company is super interesting. Down from a major high, I want to say they were like $67, $70, something like that, down to below $10 here, where we have bounced off of $10 twice right here, once at the beginning of March, and now it looks like we're just starting to cross above our moving averages. If we can continue to bounce off this $10 level, I really, really like UpWork, especially because UpWork facilitates remote work so that people can work from anywhere in the world. And with what we are seeing with Starlink as well as Amazon launching their basically satellite systems that are going to beam internet to the entire globe, I think everybody is going to have access to high-speed internet pretty soon, and it means that the market for UpWork is only going to expand drastically. So I really, really like it. Again, if you look at the revenue, the company is up by over 50% in the last 2 years. I think they're doing extremely well. They're growing quickly, but you do need to be cautious. All of these companies are not quite profitable yet. They have a long ways to go. There is a path to profitability, but a lot can happen in between there. And you need to be careful because there's also a reason that they have sold off this much. It's not just market conditions. There's a lot of things going on. But these 3 companies, I think, represent software stocks that are growing, that have a path to profitability, and that could be undervalued at this point, which makes them a good opportunity for a long-term investor as well as a swing trader. Now, if you want to learn more about how to do that, how to get in and out of these stocks, and how to find stocks like this, definitely consider checking out my free Stock Market Fundamentals course. It's hosted on Skillshare. You get a 1-month free subscription to the entire platform where you can take the course. It's 10 hours long. There's over 14,000 students that have gone through the course. There's over 400 reviews for you to take a read through. There's over 2 million minutes of watch time that have been spent on the course. So I promise you, it'll be the best free resource that you can find online. It'll be well worth your time. And like I said, if you sign up with the link in the description to this video, it is completely free for 1 month, and it's only 10 hours long, so you can do the entire course in a weekend. And thank you guys so much for watching. If you got any value out of this video, please remember to click that like and subscribe button. I sincerely appreciate it, and we'll see you in the next one. Good luck trading, good luck investing, and we'll talk to you soon.